The following is an update and technical analysis on Sallie Mae, a company of the financial services sector and credit services based upon the daily interval. And I wasn't able to go over a whole ton of the details off the Q2 2024 earnings report by beating expectations, yet some of the underlying challenges continued to persist, where net interest income reached $372 million, surpassing estimates, but the lingering rise in non-interest expenses continued to erode profitability, whereas the credit rating Moody's shifted its credit rating outlook from stable to negative. The warning signs have continued to intensify, where this is a story where every gain seems shadowed by the rising tide of risk, painting an epic struggle for Sallie Mae's financial future. And I believe we've just been rejected off a key identifiable pivot point, call it the 2250-ish handle price resistance level. 2233 with two major reactionary highs. You had a major reactionary low there, and as of yesterday, you had a violent rejection off that handle. This is validating what I continue to hype up on, the display of a head and shoulder classic looking top, and this could be the beginning stages for a rechallenge on a potential retest of its solidified neckline, and that would be the beginning stages of a major deflection and defense that must be carried out by long traders and or bull traders really at all cost to avert further, deeper technical momentum indicator damage. And that would be the existing coming up to short off this neckline. I had mentioned in that previous video to double top its previous head in shoulder, and looks like we're slightly up above, or may have zapped out a couple of stop rates there at a 1.9% reaction above the price resistance level. And here we are on a potential rechallenge where many will more than likely caught this reaction, and you could begin the SLM process on catching the right hand of the shoulder on an undercut of the 50-day moving average to ultimately rechallenge its 200-day moving average, which has significant effect on the price action of this stock. Noting down for close to 4% crash, down to 1995 for 7.6% crash, 962 the neckline, big price support level there for an 8.8% crash. If we undercut that key inflection point, you will have a validated bearish death cross continuation puncture within the 50 and 200-day moving averages, and that ultimately will serve an additional air pocket down to the 1826 handle for 15% crash, and if things get real bad, down to the 1681 for 21% crash, 1628 for 24% crash to the downside, ultimately reflecting off a huge volume profile spike around this region where the vast majority of the masses have bought above the 1963 handle, and that would only anticipate a further reduction and a quick sell-off as the masses continue to watch where the curtains fall on Sallie Mae's Q2 saga, where the signs grow ever clearer that a potential reckoning could be at hand, where the rising expenses, the downgrade from Moody's, and the tightening grip on net interest income aren't just numbers, but whispers of a greater awakening, where soon the masses will see the cracks that have been long hidden beneath the surface. And as reality collides with expectations, the story of Sallie Mae will become a lesson in foresight and the cost of ignoring the shadows lurking in plain sight.